Greetings, members, one and all of the Salivation Nation. The Federal Reserve finally admits that inflation is not transitory. So why did gold and silver drop today? Let's explore! Indeed, you were looking at the markets just before they closed today. All the metals are down. Gold is down $11.80 to $17.73.70. Silver is below $23 an ounce, $22.91. And platinum and palladium are both down substantially. So this is occurring while the Federal Reserve Chairman Jerome Powell testified and pretty much said, we need to stop using that word transitory. We need to retire that from our lexicon, admitting what we have known for quite some time, that this inflation is not just a temporary thing. So let's take a look at an article here from MarketWatch that talks a little bit about this. Gold settles lower on Powell testimony, and there are concerns about Omicron. So with that new variant, with still concerns happening there, and with the pandemic here still continuing to cause some fears, as well as inflation fears and supply chain issues, why would gold and silver go down? Well, let's look in here and see what this article has to say. Then we'll look at another article that talks a little bit about it too. So they're lower Tuesday as comments from the head of the Federal Reserve suggested that the central bank might speed up tapering of its monthly asset purchases when it meets next month. There's your answer right there. And that is what it's about. Tapering is what everybody's been salivating over in terms of the markets. Everybody's hanging their hat on that. And that's what's going to cause prices to go up, which means essentially their monthly asset purchases will be scaled back. Federal Reserve Chairman Jerome Powell told lawmakers that it would be appropriate for policymakers to consider speeding up the wind down of the central bank's monthly asset purchases when they meet next month, prompting further declines in benchmark U.S. stock indexes. Prices for the precious metal had been trading higher in the wake of some downbeat comments on the vaccine fight against the new COVID variant from Moderna's CEO, which prompted a decline in U.S. stock market and raised the appeal of Haven Gold. But the sell-off of U.S. stocks intensified, likely prompting some investors to sell gold to cover margin calls. And that means it's going to cause things to go down, because we've seen this as a very slight example of what we saw in March 2020, but only a fraction of what we saw. The trigger for the move lower in gold was Powell commenting that the timeline for tapering might be accelerated by a few months sooner. So a few months essentially has caused gold to go down a little bit more, as well as slight concern in the markets when I think they went down about 600 points as of the recording of this video. The comments provided some support for the U.S. dollar, with the ICE U.S. dollar index, which is down negative 0.48, turning briefly higher, pressuring prices for gold, which is traded in the greenback. The next meeting for the Fed is going to be on December 14th and 15th. We'll see what happens then, because there will be some big moves one way or the other for gold or silver then. On Tuesday, the most active February gold contract fell $8.70 to settle at $17.76.50 an ounce after trading as high as $1,811.40 during the session. Based off the most active contracts, prices lost 0.4% for the month of November, according to Dow Jones market data. London had expected the brief upward gold price reaction to the Omicron variant to go the way of all geopolitical, or in this case geomedical drivers, fade away and leave the price generally where it was beforehand. The same goes for the market reaction to Powell's reappointment and his indications today that the QE tapering schedule might be accelerated. The primary drivers for gold will be the simple fact that the Fed can't get very far down the path towards policy normalization without either collapsing financial markets or running into a brick wall of debt service costs, said London. Once investors realize this, likely the Fed either has to turn back from its tapering or institutes the first rate hike, gold will take off. And that's just it. The rate hikes now, I think, would probably lead to gold going up. And I think it's just a precipice of things that they're looking at to try to do anything to squeeze out some good news. And so this is why this tapering and is what is going to be the thing that they're hoping on to save the markets. And maybe this fact that the gold has dropped, which, by the way, gold itself did not drop by a whole lot on a percentage base, but it did drop more than silver. Silver is now acting much like it has in recent times, in exact opposite of gold in some cases that we've covered on this channel, or in this case, not as severely as a drop that we have seen for gold in this case. Gold dropped over twice the amount that silver did on a percentage basis. Now, admittedly, the movement of prices of gold and silver did not fall by a whole lot, but the fact that it did some is representative of what's going on here. I think what this means, in my view, and again, I'm not an expert in any of this, but I believe we might be seeing some pretty solid resistance for gold and silver, maybe especially silver at this point. A solid resistance in the high 22s, where there could be room for it to fall further, especially if in the December 13th through 15th meeting they meet and they express more bullish, or they're more bullish about tapering. In other words, even though some of this may be baked in, we want to get actual commitment to it before we start to see these prices drop further. Where that floor could be, where that resistance could be, is possibly near where we are at now. But one really doesn't know for sure, but that's just my theory. In this article from Kitco, from Anna Golubova, the term inflation is transitory will be dropped. We will no longer hear the Federal Reserve talk about that, as gold fell below that $1,800 an ounce level yet again, shedding near $40, as Jerome Powell and Secretary Treasury Janet Yellen testified before the U.S. Senate Banking Committee. The price of the yellow metal moved down when Powell spoke about a more aggressive tapering and more problematic inflation, sounding more hawkish than before. So the tapering has won the day with the troubling inflation that we're starting to see now as moving out of the transitory phase. Powell told the U.S. Senate and the U.S. Central Bank would be considering wrapping up tapering a few months earlier than June. At our next meeting, it is appropriate for us to discuss whether to wrap up our asset purchases a few months earlier, he said. We've seen elevated inflation pressures, strong labor market data, strong spending data. Every dollar of asset purchases does increase accommodation. The U.S. economy is strong and inflationary pressures are high. And that's just it. Economic activity may be strong, but the U.S. economy is not strong. Let me explain the difference. People are scared about rising prices. So what are they doing? They are indeed purchasing more goods and services now, fearing that they will go up in the future. As quickly as a month, 1%, sometimes even more. That's the average. The rate of inflation is speeding up. The velocity of inflation is here and is recognizable. 6.2% was the last measure, and it is going at a rate of 1% every month. Every 30 days, your dollar loses value by 1%. That's scary. And of course, it can be a frustrating part of this as that is occurring, gold and silver are falling. So with gold and silver falling here, they're not keeping up with inflation. Both metals have been horrible inflation hedges for the year 2021. However, that is something that you should note here, folks. They don't always fall in line with inflation, CPI data. That has never been the case with gold and silver. They've never fallen in line with the CPI numbers reported at any particular time. They do, however, perform as inflation hedges over the course of a long enough period of time, especially when you consider that it wasn't that long ago, just over a year ago, when silver was below $20 an ounce. And so if you take that into account, they are holding their own when you look beyond the immediate time of the pandemic and what it was before the pandemic. Not only that, but especially with silver, you are seeing premiums both when you buy and also when you sell. You are benefiting from a premium when you sell. Dealers are buying silver for higher than spot price, and to some extent gold as well, although gold is a tighter market, but its premiums have increased as well too. So that's something you must consider, take into account here. Patience is the key. It does not run in tandem. The prices do not move in tandem with inflationary pressures or what we're seeing. You can see here that a lot of it has to do with quantitative easing, with the sentiment day to day, with the markets, and also as industrial commodities, both metals, but especially silver. What are we seeing this year? We are seeing supply chain issues. Supply chain issues means that there is less demand. Silver's not getting to where it needs to be. Maybe a lot of silver's not being delivered to where it needs to be, knowing that there's some issues and problems with getting supplies out there. So that's going to have an effect on the markets. And so that is something we have to take into account too. It's about perseverance and patience. You've heard me talk about those concepts, for those familiar with this channel, long time ago. We must be patient and persevere. You only take a loss when you sell. And what is it about stacking gold and silver as opposed to flipping it or what have you? Because most flippers know what they're doing, and they sell it whenever a coin is hot and that type of thing. Collectors in a different world, especially if you're collecting to flip. Although me as a collector, I like to collect because of the enjoyment of it. If you're stacking silver, such as in the form of eagles or any other kind of bullion bars and the like, you are holding for the long haul with the understanding that you should have an emergency account of cash set aside, either in a bank account or even more preferably, these Federal Reserve notes that are, yes, indeed losing value every month. With that understanding, still have some on hand in case you need them in an emergency, so you don't have to sell your silver and gold, because silver and gold should only be sold in the times where you're cashing out for retirement or in an ultra emergency situation. And that ultra emergency situation should be at a time when you have dollar cost average enough to smooth out any losses that you may have if the prices happen to be unreasonably low at a given point in time. Nonetheless, the article continues here and says, Powell also stated about this point that it is best to drop the term inflation is transitory, adding that the risk of more persistent inflation is higher. That's right. So he's finally said it. They've admitted it. The Federal Reserve has admitted what you and I have known ever since the beginning. We've teased about it. Transitory inflation. We knew that wasn't the case. Indeed, finally they've admitted it. The threat of persistently higher inflation has grown, he says. We will use our tools. Oh, I tell you what, every time I hear that they've got their little toolbox, it seems like the only tool they have right now, there's two. And one is a little wrench that turns the tapering back, or tapers up, opens up the spigot of tapering, which means it turns back the faucet of liquidity into the markets, the bond markets, the quantitative easing. That's one tool that turns that little nut that one way. The other tool is raising interest rates. And that's what they've got, just two tools. But they will use their tools to make sure higher inflation will not become entrenched. All right, so we don't want entrenched inflation. We can now see higher inflation persisting through the middle of next year, he says. What was missing about the inflation was the supply problems. We didn't predict the supply chain problems. That's what we missed. In response to Powell's testimony, gold tumbled from the daily high of 1811.40 to the low of 1772 and 20, down nearly $40. It's crazy. He also touched on the risk of around the new Omicron variant, noting that it poses downside risk to employment, economic growth, and inflation. Greater concerns about the virus could reduce people's willingness to work in person, which would slow progress in the labor market and intensify supply chains disruption. He also revealed the central banks highly anticipated discussion paper on central bank digital currency would be released in the coming weeks. I think that's going to have an effect probably on prices. Yellen testified alongside Powell and stressed the debt limit issue, warning that failure to act would lead to a deep recession. Oh my goodness gracious. We don't want a deep recession, so we must give the Congress much more money to spend, or else Americans aren't going to get their Social Security checks or military payments. Will not reach their bank accounts. I think that's a little bit of a hype. I don't know. I think, the thing about these debt limits, it raises the debt limit beyond from what I understand, it's for future, not existing where things are, but I don't know. There may be something more to it. But to me, I take it with a little bit of skepticism on her comments there. She also gave us a little medical advice. Janet Yellen is giving us some medical advice, folks. I heard the soundbite today that the best way Americans can get back to what they're doing is to get the vaccine. Okay, if you're not going to listen to Dr. Fauci, you should listen to Janet Yellen. All right, very good. All right, so there it is. There's your news for today. Interesting indeed. Inflation is not transitory. Gold and silver are down, and so are platinum and palladium. Interesting and fascinating indeed. Let me know what your thoughts are in the comment section below. I would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.